This is our video blog for December 15th, 2010. The euro dollar has a daily, weekly, monthly trend that's down and prices underneath the hourly moving average. All things that we look for to look for sells. The fib level, which was a projected low, got broken last night, and so when it came back up, once a support area gets broken, it tends to become resistance. Came back up to this level, couldn't get above it. Great place to go short because everything's pointing to the downside, and you might want to draw your fibs on that last wave down to get an idea of where to get out of this trade. Fibonacci profit targets, 10-day moving averages there, lots of support. It's also underneath the lower containment band. So that trade was good for about 50 pips. And because the market's so weak, you want to look for a pullback to go short again. This isn't much of a pullback, but if you did go short right here, pull back about 10-15 pips, enough to move your stop to break even. And if you drew your fib on this first little wave here, you can see the market came up to the 1.382. This is our Elliott two-wave pullback. Spot a trend, wait for a two-wave counter trend move, go short, and you can see this also pulled back about 50 pips. And because the pullback double bottomed here without much weakness, this is our double bottom with divergence counter trend method. You want to exit that trade and possibly even flip and go long. This would have been your first profit target, previous day's low is your second, and the fib level up here most likely the high of the move, given the fact that the daily, weekly, monthly trend's down. So if you got into this trade, most of us would have got out of half our trade there, kept raising our stop, and notice the IntelliTrend bar stayed green all the way up. Beautiful counter trend move. And you have the exact same thing, double top at the high with divergence, less strength this next time up. You might want to wait for the previous day's low to get broken just for confirmation. This would have been a profit target. It's not too far below. Price shot through there and just continued down. Most of us, when it gets down near the lower containment bands, would have just exited the whole trade, but that was a huge trend trade right there. Pound dollar, also daily, weekly, monthly trend down. The hourly moving average price is underneath it. You had a narrow range hourly sell signal right here. Many of us wouldn't have taken that trade because there was just a ton of support underneath it. But when the market pulled back up and couldn't get above the hourly, this is usually a pretty safe place to go short. The first time after a big move down, the market retraces to the hourly, it usually continues that trend. So this was good for about a 80 pip move. We have off the charts weakness right here. This is a little bit of a counter trend move. You draw your trend line underneath there, and because this had extreme weakness, you might want to go short with this as your profit target. Most of us would have gotten out of our entire trade right there and not anticipated or expected it to continue down. I definitely would not have sold underneath there because it's very unlikely to work. Today it worked, but you want to follow your rules, which are set up to help you avoid many losing trades. So I would have personally skipped on that trade because it's underneath the lower containment band, and it appeared that the momentum of the down move was lessening. Dollar Swiss, daily, weekly, and monthly trend is down, but the price is above the hourly. So, you're not as likely to make a move up when the daily, weekly, monthly trend's up. It pulled back to the hourly here, some counter trend buy signals. If you bought this and it went up and you see there's no statistical strength, take 10, 15, 20 pips and get out. You may not want to short up here because if you do, it's likely to stall out here at the hourly. This one just kind of chopped around. Because the longer term trend was down, when it broke down underneath these lows, you might have gone short. Fell about 30 pips to the lower containment band. And it had incredible weakness, so you're waiting for a pullback up to go short again, but unfortunately it shot right back up above the hourly. So above the hourly, it's more likely to go up. Because of the previous extreme momentum, you might want to draw your fibs on this. And this is another perfect example of an Elliott two-wave pullback. It's a little riskier because the price has gone above the hourly here, but you can see the upwards momentum is slowing and the daily, weekly, monthly trend's down. So whether you got in there or after this 1, 2, 3 pattern right here, that was a decent trade. I don't really see any other trades I would have taken. We wouldn't have known that the market later on would explode up like this. This is the high of the day. Anytime an area gets hit 3 times, it usually busts through there. So it's kind of an aggressive trade that I don't think I personally would have taken due to the fact that the weekly monthly trend's down, but nonetheless, aggressive traders would have been rewarded for that. Dollar CAD. This currency also has a weekly monthly trend that's down. You know, when it's above the hourly right here without that much weakness, you might want to give it a shot here. You might have made or lost money on that trade. You made a little bit here. And once it breaks down underneath the hourly, makes a lower low, comes back up, tests, I call this a retest of the hourly. That's a decent place to go short. It's falling without that much weakness. So anytime you see that, usually you can draw your fibs on that and get into these as a counter trend trade right down there near the fib target. Australian dollar, the weekly and monthly trend are up. However, this currency, you know, is going through a counter trend phase right now. Last night it came down to the fib targets, or the Fibonacci gray area, and it broke through it. So once that happens, usually price continues down. So when it comes back up and can't get above it, you want to look to short here. It pulled back about 35 pips. If this wasn't so weak, you might look to buy down there because the longer term trend's up. If you are going to buy down there, wait for the weakness to subside. Maybe you would have went long right here in this little flag pattern. And this is a good profit target level. It shot through there and it came up and hit the hourly. Because price is underneath the hourly today, it's more likely to go down. But keep in mind the weekly and monthly trend's up. You know, because the weekly monthly trend's up, I usually don't sell those. But the second time it touched the hourly and couldn't get above it, that's, you know, I would consider that a double top. It didn't have that much upwards momentum, and I would have gone short here once it broke underneath the previous day's low. This would have been my profit target, but it shot right through there. Here's my next profit target. I would have got out of half the trade here, and it kind of stalled here without that much weakness. I would have probably got out right here and missed this remaining 20 pip down. This one, all the time frame trends lead to down, so it makes it a lot easier to trade. New Zealand dollar, narrow range 7 breakout pattern, fell about 30 pips, and then the price went back above in this range. You might have gone short again right here. You would have had a loss. And when it came up to the hourly with almost no strength compared to before, this right here is a great trade right near the hourly. You have a counter trend sell signal, and then the market just took off. Now it hit the lower containment band and our fib level. Usually these fib levels contain price, so I would have probably got out of the trade there and missed this remaining move down. But one of the reasons it continued was the real-time momentum was extreme, and the daily, weekly, monthly trend is down. If you're an aggressive trader and you know, maybe you missed some of the trades earlier in the day, you can take this trade right here, draw your fibs on there, and when it's underneath the lower containment band, most of the time it doesn't go more than the 1.382 or 1.68 fib target. So, you know, count yourself lucky that this trade worked. You made about 40 pips there and you get out. Euro yen, the weekly trend's up, the monthly trend's down. The price was having a hard time yesterday getting over the previous day's high, and it's just kind of stalling and chopping around. Therefore, you might have given this a shot right here. This would have been your first profit target. This is your second. Because of the extreme weakness, if you didn't take that first trade, you might have gotten into this counter trend trade right here, expecting the trend to continue down, and it failed. You know, once it moves 5 pips, we tighten our stop in half, so we would have lost about 6 pips on that trade. When it's underneath the hourly, you typically don't want to buy. When it's above the hourly, if it can then do a retest at the hourly here and not go below it and break out again, we go long, but it didn't. It failed again. And this is just really chopping around here with no real momentum either way. I don't see any trade I would really want to take until after it made this big move down and then pulled back. You might have gone short here and here, and that trade worked. But anytime a market's this choppy, I usually avoid it. This currency has a slightly upward weekly monthly trend. So, you know, when this broke underneath the hourly, then back above it, because the longer term trend's up, you might go in. You can see it shot up a little bit. There wasn't a whole lot of momentum. And then price broke down again underneath the hourly and did a retest here. Same thing here. You might have gone short right here. You would have probably had a loss. If you went short right here, you made a fortune on that retest. And at that point, the daily, weekly, monthly trend shifted down. However, it fell without a whole lot of momentum, so you probably would have got out of your trade somewhere down near 131.20 and not continued trading it because it didn't have that much momentum. Keep in mind our currency meter also gives you these trades. You can see the pound was off the charts weak, and the dollar was strong today, and also the yen for the most part. Keep in mind that those both have weekly trends that are down, and this one has a monthly trend that's down. Australian dollar, daily, weekly, monthly trend is up, but once it breaks underneath the hourly, it's more likely to go down. I don't know if I would have sold it right here, but when it retested the hourly and couldn't get above it, you could give this a shot. It fell about 20 pips. The longer term trend is up. Aggressive traders, a lot of times, what I do and I teach in our class is you draw your fibs here, and if this price does fall and doesn't have that much weakness on the way down, it goes down to that fib target, which isn't visible right now. It might be at 82.80 or so. It didn't go down to that level, but if it did, that would have been a good place to buy down there because the longer term trend's up. New Zealand dollar has very mixed daily, weekly, monthly trends, so that makes it kind of tough. But you have this fib level that the market held as support all night and finally broke underneath it. That's a great place to go short. This is your profit target, and so is this. It was extremely weak, so you might have gone short right here, and after you got out of the first trade with a nice profit, you would have lost on that one. And then the price breaks back above it. So, there's a lot of momentum on the way up. It pulls back. You might have gone long right here. That trade didn't really work. It went up about 15, 20 pips and stalled. You have clear double top with divergence there. Aggressive traders or scalpers would have gone short there. I usually wait till that fib level gets broken again, and then you got a retest here. I find that's a lot safer. Just for my own trading, and when you trade larger lot sizes, you want to be a lot more careful before you pull the trigger. With one mini lot, it doesn't make any difference. You can see that move down. It had pretty decent weakness, and on the way up here, it had no strength. That's the kind of trade I look for, especially since all the daily, weekly, monthly trends all line up. I draw my fibs on there, and these are my profit targets. That's the kind of trade I like. And at this point, we have extreme weakness, so those trends usually continue. And you wait for a little pullback, goes right up to the previous day's high, can't get above it. This is another retest. You go short right here, and it pulls back, and it has a little bit less weakness. Double bottoms here. You get out of that with a quick, tiny after spread, maybe 5 or 6 pip profit. I probably wouldn't have held on for this remaining move down. Dollar yen, daily, weekly, monthly trends up. It doesn't have that much momentum earlier. This is a decent sized pullback. You always want to look at what your likely reward is versus your risk. So if you bought this pullback, you got previous day's high, monthly pivot, fib level right above you. So it doesn't make any sense. And then when the price pulls back here, it's underneath the hourly. That's usually a risky trade. I tend to avoid those. So this is just kind of in a chop zone between major selling above and major buying at the bottom. It's a very tight range. Doesn't make the risk versus reward criteria worth it. This is the strongest move up right here, so you might have given this a little shot because there's a nice little wedge, flat bottom wedge pattern right here. But again, there's major resistance above. Once a resistance area gets hit 1, 2 times or more, usually it's likely to break through. Dollar yen's not my favorite pair, so I would have avoided this. I don't like to trade that pair, and I rarely do. This one's also in a chop zone between two fibs, but the daily, weekly, monthly trend is up. Last night it went up, pulled back to the hourly without that much weakness. This is a great place to get in because you have the 10-day moving average and a fib level right underneath you with major likely buying. Your profit targets are up here. All the time frame trends line up. And at that point, if you buy this pullback right here, it had to be a pure scalp. It goes up 15, 20 pips, hits this monthly pivot level, previous week's high, and then it pulls back again without that much weakness. This level got hit last night, today, earlier, and so the third time will get you killed when you do a counter trend trade. Oftentimes works in your favor when you're buying a triple top breakout. So if you bought this breakout right here after that level got hit, and the lows for the day keep moving up, pretty high probability trade here since all the time frame trends line up, and this is your profit target up here. It went up and hit that level without that much momentum. In all honesty, I would have got out of the trade here and missed this remaining 50 pip move up, but you could use our chandelier trailing stop, and that probably would have kept you in the trade longer, or the parabolic stop. You can see the chandelier stop had you out up here around 83.98, which is about 30 pips higher than I would have definitely gotten out of that trade.